It is Friday, August 7th, 2020. It is 8 p.m. Pacific Standard Time, and so you know what time it is. It's time for a little bit of coin metal. And it was yet another non-virtual get your ass kicked at jiu-jitsu, or no, by jiu-jitsu today. I didn't actually do any rolling today. I know, it's kind of a disappointment for some, I'm sure, but I'm not quite there yet, man. I'm working back from one or two injuries, and I don't know what it was, man. I really think it was the time that I spent out in the greenhouse this last week, where I put a major hurt on my back, and I don't know, man. I had a lot of trouble on like Monday and Tuesday just staying out of bed. You know, I mean, because it hurt quite a bit to do anything, and I don't know, I managed to get around and get moving again, and then on, I think it was Tuesday night, busted out the old mat, did some rolling around, some individual drills and stuff like that, and I managed to loosen it up quite a bit. And then today, it felt really good as far as techniques goes, but it's still there. I mean, it's making me not want to have somebody roll all over me. But I did work with a fairly large gentleman today, and honestly, I don't think I was quite comfortable with the movements until the end of class. And we were doing some reverse De La Riva stuff again, and we did the same kind of push-pull business, but we were doing something else. And like I said, it wasn't until like the last maybe 2 or 3 reps where I felt like I was getting the grip right on the back of the calf, and you know, I can imagine how that'll change the position quite a bit. Just the way I'm gripping the back of my opponent's leg, you know, but I don't know, like I said, I had the hardest time getting my hips up in the right position and getting my arm wrapped all the way around the back of his calf. And but of course he's a slightly bigger guy, so it's understandable, right? But it was funny, I thought I was actually skipping a step because I was able to maintain grip on the back of his ankle. And like one of the things we were practicing today is going from having your De La Riva, your reverse De La Riva position, you know, where you've got one leg, your right leg wrapped around your opponent's right leg to where your toes are on the opposite side of their hamstring, and you got the back of that heel cupped with your right hand, and then your left foot is just up on the hip to try and keep him at bay as far as distance goes. And the exercise was that your opponent grabs the foot that he has on his hip, and he pushes it down and tries to do a knee slide in. And what you have to do is keep him at bay, and with arm frames on his left arm, and kind of push him away or kind of distance yourself with your left knee by forcing it in between you and your opponent. And I was taking it all the way up to a closed guard, where I was backing my opponent off enough to where I could get both of my legs wrapped up around his torso and tied up behind his back. And he thought that was kind of funny. I actually took it all the way around to a back take position at one time. He thought that was pretty cool too. But anyway, yeah, I had a lot of fun, and I felt like it was dialing in a little bit for me. You know, it's that 3 or 4 months off that I wasn't even in contact with people. You know, I wasn't doing just 2-person drills or anything during that time. And you know, it's one thing to exercise when you're alone, but like making sure you're doing it right and staying on top of your form and making sure that you're keeping it aligned and all that, it goes out the window unless you're watching like YouTube videos or something like that, which I didn't do the whole time. Anyway, I really miss the working with other people on jiu-jitsu, and you know, I've just been really fortunate that I've had my partner who's been willing to get together with me and train. But at the same time, I need to get in and do some sparring with them, and I don't know, it's a confidence thing, I guess. But like I said, I felt really good with the technique today, and I think I'm finally starting to get a little bit of that rust off of me from that period of downtime. But anyway, let's go ahead and throw down with some music. And you know we're going to start with Body Count, because that's just what we do here. But what song? I was thinking about Ski Mask Way, but I don't think we've touched on... Oh, no, we did. We touched on Ace of Spades last time. Here we go. Bum Rush, First Dance, here on Coin Metal. And that was Metallica with Dream No More. Yeah, you know, I don't know how I feel about that album, honestly. I think that there were some aspects of I really like, you know, but there were other other aspects of it that I didn't like. And one of them I didn't like is the sparse amount of leads. And my understanding is that Mr. Hammett had recorded all of his leads with his iPhone, and somehow it mysteriously disappeared and all of his leads with it. Whatever. Come on, man. He could have been storing the shit on a fucking online server somewhere if he really wanted to, you know? Anyway, as far as what we're going to get into today, I did look up a few things, and I've been seeing a lot of stuff about Uniswap, and I tend to stay away from the whole DeFi business, mostly because I think that ICOs were bad enough. In all honesty, I didn't think that that was a positive way to launch a cryptocurrency project. You know, personally, I'm of the opinion still that the best way to launch a global cryptocurrency is the same way that we did it with Bitcoin and thousands of other altcoins, where you start up a GitHub account, you upload your code, you point people to it, and you say, hey, if you want to mine this, fucking download it. You know, or, you know, even your WordPress page or some shit like that. At this point, it's entirely possible to set all this stuff up with minimal hardware at home and get started. Now, it's not without risks. You know, there's plenty of people out there that are trying to attack some of the weaker and better known networks out there, such as we covered last time. You know, I was kind of surprised with Ethereum Classic's low amount of hashing power. But I imagine that if Vitalik is ever successful in pushing Ethereum to be Ethereum 2.0, proof of stake, if they are ever successful at that we'll probably see a good number of miners that were mining Ethereum switching over to mining Ethereum Classic, because it is a proof of work variant of Ethereum that doesn't seem to be wanting to transition away from that anytime soon. So I don't know. We'll see how that goes. That one, supposedly, I guess there's some sort of flag block or some shit like that signaling for support of shifting over to POS or something like that coming soon. I think they put up a test net for ETH 2, but how far they're getting on that, I haven't bothered to check, honestly, because I don't think that transition is going to happen. Not anytime soon, anyway. And so I got this thing here. It's on Uniswap.org. A short history of Uniswap, and this is by Hayden Adams, and it was written November 2nd, 2019. Now, that's a little bit older than I was anticipating, but, well, you know, we're going to go with it anyway. But yeah, so we're going to go for this in Hayden Adams, so yes, penis. VO, Uniswap is born. On November 2nd, 2018, Uniswap was publicly announced and deployed to the Ethereum mainnet. In an exciting, anxiety-inducing moment, I fired off the announcement tweets to my 200 followers. And it's excited to announce the launch of Uniswap, its protocol for automated exchange of ERC20 tokens on Ethereum. For many people, this was the first they'd heard of the project. For me, it was the culmination of over a year's worth of work. A huge amount of help along the way. Uniswap changed my life, and today is its birthday. To celebrate this, I want to tell its story from the beginning in VO of the Uniswap Birthday Vlog series. Stay tuned for V1 and V2, where I discuss Uniswap's first year on Ethereum mainnet and our plans for its future. Okay, now I understand why this thing is so long. Okay. Accepting Ethereum. On July 6, 2017, I was laid off from my first job out of college, working as a mechanical engineer at Siemens. Feeling down and directionless, I informed my friend Carl Flourish, I don't know how to pronounce that, dude, sorry. Who at the same time was working on Casper FFG at the Ethereum Foundation. The conversation went something like this. Hayden, I just got laid off. Carl, congratulations. This is the best thing that could have happened to you. Mechanical engineering is a dying field. Ethereum is the future, and you're still early. Your new destiny is to write smart contracts. Hayden, don't I need to know, how to code? Carl, not really. Coding is easy. Nobody understands how to write smart contracts yet anyway. Ethereum proof of stake, trustless computation, etc. Hayden, okay. Catching me at a low point, Carl convinced me to accept Ethereum into my life. I was determined to give it a shot and spent the next 2 months learning the basics of Ethereum, Solidity, and JavaScript. In order to expand my skill set, I decided it was time to work on a, quote, real project. At Carl's suggestion, I decided to implement an automated market maker as described by Vitalik in this Reddit post and this blog post. Proof of something. From October to November, I built a proof of concept, including a smart contract and my very first website. The contract had a single liquidity provider and allowed simple swaps. Here it is in all of its glory. And it gives us a nice little link to it. The demo remains unchanged from its original version except for a single line of code, window.ethereum.enable, and that I added to make it work with 2019 MetaMask. Building the proof of concept was my first step down the rabbit hole of programmable money. It was the most intriguing thing I had worked on in my entire life. It didn't even feel like work. I also began to see the UX implementations of automated market makers. At the time, EtherDelta was the only decentralized exchange with traction, but the UX felt messy and unintuitive. Using my demo somehow felt better. DevCon 3. In a talk at DevCon 3, Carl used my Uniswap demo as an example of the power of crypto economics and open source financial applications on Ethereum. I had been unemployed for 5 months, living off of cryptocurrency I was fortunate enough to have bought earlier in the year. Uniswap was a success by my only metric at the time. I knew how to write smart contracts. Maybe it was time to move on and get a job, if there were any jobs for Solidity native developers. However, an attendee of Carl's DevCon talk, Pascal Van Heck, reached out to me. He had been closely following the progress of automated market makers on Ethereum and expressed interest in supporting my efforts. He even gave a grant to fund my next month of research. We began weekly calls to discuss progress. Pascal brought new ideas to the table. More importantly, however, our calls brought a sense of structure and accountability to my work. Uniswap had two major unsolved problems, which I set out to tackle with an engineering mindset. It only worked for a single ETH/ERC20 pair. It only worked for a single liquidity provider. Ethereum values. By this point, I was fully captivated by Ethereum's unbounded potential. There were properties I cared about. It was censorship resistant. No one could stop it. It was decentralized. No one controlled it. It was permissionless. Anyone could use it. It was secure. Anyone could verify execution. Yet something fell off in the ether. The major projects on Ethereum embodied some of its properties, but few embraced them fully. Central points of failure, censorable applications, and overly complex architecture, dApps were designed entirely around the idea of having a token for use cases that clearly did not need one. I began thinking about Uniswap not just as a learning tool for myself, but one for others. I could not imagine a world where it competed with, quote, real projects, the ones that raised between $20 and $150 million in summer of 2017. But maybe it could serve as an example of an application that truly embodied in Ethereum. NYC Mesh. In December, I had attended NYC Mesh meetup with Carl following an anti-crypto article from its founder. Now Ethereum famous, Carl was recognized by a CoinDesk reporter who asked him about the intersection between meshnet and crypto. Carl did not want to give an interview, so he directed the reporter to me. I blathered on about Layer 2 solutions I barely understood and was quoted in an article. Plan B, Ethereum innovators are reviving the fight for net neutrality, CoinDesk. Kelly Capuzzo, a friend of mine from elementary school through high school, who I had not seen in over 6 years, saw the article and reached out. Since then, he had worked as a designer at Microsoft, Google, and more recently had delved into Ethereum while working on a website for Foam, Uniswap pre-alpha. By late January 2018, all major smart contract issues had been solved. Exchange contracts could support multiple liquidity providers by using an internal liquidity token to track each LP's share of the generated fees and underlying collateral. A factory contract allowed anyone to add support for a token. All tokens were paired with Ethereum, allowing it to be used as an intermediary for anything-to-anything swaps in a single transaction. I reconnected with Callie just after finishing the updated Uniswap smart contracts, and we discussed the project at length. He offered to help out with the front end, which is now lagging behind the contracts. Working around his other projects, Callie designed and built a sleek new interface for Uniswap on top of my incredibly shitty React codebase. Several weeks in, it was pretty clear that my React code was untenably bad. Fortunately, I had recently reconnected with a friend from college, Ucel Vilchis. UCL was coming out of coding boot camp that he had entered on the advice of our mutual, Carl Forge. You should learn code, Carl Flourish. Yeah, there we go, Flourish. Looking to build up his resume and experience, UCL agreed to refactor the Uniswap front-end codebase. By March 2018, the three of us had built a fully featured demo of Uniswap. Yes, of course, I dug it up and hosted it. And gives us a nice little thing here. Disclosure, the demo remains unchanged from its original version. Yeah, it's the same thing. Meeting Vitalik. By April 2018, I'd been unemployed for 10 months. The crypto I was living off of was down over 75%, dramatically decreasing my personal runway. Despite this, I yellow bought a last-minute flight to Seoul, South Korea. This was the first time I left North America in my 24 years of life. Partially a personal trip, it was time to coincide with Deconomy 2018. I attempted to enter the conference without a ticket, but was firmly rejected. However, Carl was just arriving along with other members of the Ethereum Foundation. Carl pulled me up to the side and introduced me to Vitalik, who he had already discussed Uniswap with in the past. Our conversation went something like this. Carl, this is my friend Hayden. He made Uniswap. Vitalik, hi, nice to meet you. Is it open source? Me, of course. Vitalik, what's the URL? Me, gives the GitHub. Vitalik reads my entire smart contract on his phone. Vitalik, have you considered writing it in Viper? Also, you should apply for an Ether Foundation grant. Vitalik's ideas had yet to fail me. Immediately after returning from Seoul, I spent 2 weeks rewriting the contracts in Viper. There were no guides or developer tools like Solidity had, but I was able to use the original Casper FFG contract as a reference. At the time, this was the only Viper contract I could find outside of simple examples of core Viper repo. Making some friends. Up to this point, Carl was my only close friend in the crypto world, but that was soon going to change. Just before leaving, Carl invited me to a small social gathering. There I met and became friends with Philip Dan Robinson, and Andy Millennius. In addition to being wonderful people, all would become crucial to the success of Uniswap and influence its future direction. 2 weeks later in May, I flew to Toronto for EdCon 2018. This was the first Ethereum conference where I made it past security. I spent 3 days attending talks, meeting people, and demoing Uniswap. My 4 friends in crypto were all there and introduced me to a ton of other people. My crypto social network was expanding. Among the friends I made at EdCon, Jinglan Wang deserves a shout out, as she has been a fantastic advisor ever since. And who says there aren't women in crypto? I met David Knott, a former Viper dev, in person for the first time. I told him that I had rewritten Uniswap in Viper. The next morning at 8 a.m., I woke up to a phone call from him. He told me that he was scheduled to give a talk on Viper, including a live demo in 2 hours. Uniswap was the only dApp being written in Viper, and he asked if I was interested in giving the talk instead. I explained that I had only just learned Viper 2 weeks prior and never spoken in public, and that I generally had no idea what I was doing. David assured me that it was fine. 2 weeks building on Viper was more than enough to speak publicly and authoritatively on it, so I gave my first talk. Fucking awesome progression, by the way. I took the same flight back to New York as Dan. We spent the entire time gas optimizing Uniswap. By the time the plane landed, Uniswap was 30% more efficient. It was now the most gas-efficient exchange on Ethereum by a significant margin. EdCon 2018 was extremely encouraging. The reactions to my Uniswap demo were more than just mild interest. People were legitimately excited by it. They seemed to understand and share the values that I intended for it to be an example of. I realized Ethereum's community went far beyond ICOs. There were people who truly cared about its vision of a permissionless, decentralized financial system. NYC Blockchain Week 2018. My plane home from EdCon landed me directly in NYC Blockchain Week. I spent the next week attending an endless spew of events and parties. A tweet made its way onto my feed. Are you dreading Blockchain Week? Are you waking up sweating at the prospect of being pitched a load of bullshit? Are you behind on the projects that actually matter to you? Are you desperate for a place to escape the mania and do some deep work? Come along to Buildle Week, and it gives us a nice little URL to it, and that was Richard Burton, May 10th, 2018. Living a 15-minute walk away, I decided to check it out. Richard Burton was the founder of Balance, an Ethereum wallet startup. I showed him my demo, and he immediately wanted to understand how it worked. A long conversation ensued. Up to this point, I considered my role in Uniswap to be mostly a technical one. When someone asked how it worked, I often started by telling them the mathematical formula behind it. Many people just walked away confused. Richard helped me understand that people not understanding Uniswap, it was a me problem, not a them problem. Developers were just a small part of a bigger picture. If I wanted people to use my project, I needed to talk about it on their terms, in ways they understood. Uniswap's biggest understanding challenge was a social one. Things become kind of real. It was around that time that I decided Uniswap was becoming something I wanted to take to completion. I mapped out what was needed for a mainnet launch. Number 1, finalized production-ready smart contracts. Number 2, responsive user-friendly trading interface. Number 3, smart contract security audit. Number 4, finished white paper. And number 5, developer documentation. My previously mentioned friend Phil is a blockchain security expert. On his advice, and with his introduction, I received a quote from Runtime Verification for a formalized model of Uniswap, a high-level code review, and a partial formal verification of smart contracts. Taking all this into consideration, I applied for an Ethereum Foundation grant of $50,000 plus the quoted cost from RV. Balance. Summer 2018 kicked off with me obsessively refactoring Uniswap's smart contracts, working on the white paper, and attending crypto events in my spare time. For the next 2 months, I interviewed and then waited to hear back about the grant. I worked daily at the Balance office, which Richard and the rest of the team members at Balance, Christian Baroni, Jin Ching, and Mike Demaraes were kind enough to let me use. Knowing I was running low on funds, Richard was even generous enough to give me a personal grant to support my efforts. I began attending weekly meetups called Whiteboard Wednesday at Balance office. Every Wednesday for 2 hours, anyone and everyone working on a crypto project was invited to share their weekly progress. The Balance.io Whiteboard Wednesday was kicking off with, and gives us a nice little URL. I attended almost every week, explaining and re-explaining Uniswap to different groups of people. I learned how to speak about Uniswap in different settings and soon could explain it to almost anyone. I even started dipping my toes into crypto Twitter. That's a dangerous place, dude. Similar to my calls with Pascal, Whiteboard Wednesday brought a degree of accountability to my life. I did not want to show up 2 weeks in a row without progress to report. Maker. As summer progressed, I spent an increasing amount of time at the NYC MakerDAO office, where my previously mentioned friend Andy was CTO. Maker is a decentralized stablecoin project that everyone reading this article already knows about, so why am I even describing it? I became friends with a number of people at Maker, including Ashley Schapp, another friend who became important to Uniswap. Working at both the Balance and Maker offices provided me with a constant stream of interesting people to meet and projects to learn about. Summer passed by quickly. My smart contracts were as optimized as I could make them on my own. Finally, towards the end of July, I received an email. Uniswap would receive a grant from the Ethereum Foundation. Nice. Funding secured. Formalized model. Grant in hand, I immediately contracted runtime verification to formalize and audit the contracts. In a series of calls with Daejun Park, Yi Zhang, and Jianghong Cheng of RV, I detailed Uniswap's mechanisms and most important properties. They began by creating a formalized model of Uniswap. Next, they created a code spec which reworked math operations to minimize rounding errors and always favor liquidity providers over traders. The results of this work can be found here, and it gives us a nice little link. I modified the contracts to fit the spec. Next, RV performed a high-level code review in which they recommended a number of safety checks, fixes related to consistency, and other minor changes. A list of improvements can be found here. Gives us a nice link. I like that. That's the kind of thing that's like accountability related. And I'll say this from the outset. This guy that's describing his navigation through this, it speaks to me at least of somebody who is actually involved in what they're doing. I mean, a lot of people that write like descriptors of what they're doing in crypto and whatnot, if they're not like knee deep in the shit, a lot of times they tend to speak about it in terms that, give you that impression that it's like, this is just the kind of thing I'm kind of involved in and blah, blah, blah. But this guy, he went through the evolution. He started with unemployment and now he's developing something that probably millions of people are trading on at the moment. Continuing on. Let's see. Finally, the Uniswap code was frozen, and RV began work on formally verifying the contract implementation match desirable properties of the spec. This was the longest step of the process. While the audit was ongoing, I hired Kaylee as a contractor to begin designing a production version of the Uniswap trading interface. The demo interface worked well, but felt too confusing for the finished product. Recipient. Uniswap had not yet been announced, but it was not entirely secret either. In September, I was invited to speak on a panel at Ethos, a blockchain conference in Hong Kong. While technically not my first time speaking at a conference, it was the first time I was invited to do so. In Hong Kong, I was able to catch up with Vitalik, who took a look at my finalized Uniswap code. He caught one error that even runtime verification had missed. I misspelled recipient as recipient about 20 times. I before E, except after C, dude. I also accidentally stumbled my way into an Ethereum Foundation interview on ETH 2.0, and for the first time became a subject of a meme. The face when your friends cashed out of cryptocurrency, but you didn't. That's kind of interesting. After Hong Kong, I spent 3 days at Shanghai Blockchain Week on a pass-through visa before returning to New York, preparing for launch. Back in New York, I decided that I would launch Uniswap in Prague at DevCon 4, if it was humanly possible, that is. There were just 5 weeks to go, the busiest 5 weeks of my life. With formal verification underway, the biggest outstanding task was implementing Kaylee's latest front-end designs on top of a production-ready codebase. I put out feelers for a contracting firm that could build this in a month, and was introduced to Dan Sui, CEO at Kyokan. Thanks, Rick Dudley, for the intro. The codebase was to be rewritten almost entirely from scratch. I hired a contracting firm because I believed building a feature-complete Uniswap front-end on such a short time frame to the standards I was hoping for required an entire team. Instead, I got something better. Jackie Chan, VP of Engineering at Kyokan. As Jackie was coming in with almost no context on Uniswap, I wrote a long and detailed front-end spec to help speed along the process. While Kaylee provided highly detailed designs for every piece of the interface, the tense on that is a little wrong. While Kaylee provided highly detailed designs for every piece of the interface. In 1 month, Jackie built the Uniswap launch interface almost entirely by himself. For a few smaller pieces, Kenny Tran of Kyokan jumped in to help. About a week before DevCon, I finished the docs and the white paper. Also, the results of RV's formal verification work were in. No issues found. However, the runtime verification team expressed a concern. Uniswap had not been adequately studied for reentrancy attacks, the issue behind the DAO hack. I reached out to Phil Dan for advice. He was extremely busy preparing to present his latest research at DevCon 4, but nevertheless promised to look through the smart contracts for reentrancy attacks before launch. Due to the last-minute nature, this would of course be an internal audit. There would be no write-up, and the results would not be made public. VO Unishirts, DevCon 4 Limited Edition. In parallel to all of this, I contracted Kaylee to design a shirt for the Uniswap to give out at the conference. I wanted the launch to be a moment, something people could participate in. The shirt needed to be high quality, a shirt people would actually want to wear. About a week before DevCon, in collaboration with his brother Leander, Kaylee put together the incredibly cool design. To be finished on time, the shirts would have to be handmade through a process called silk screening. It would take almost a week to create the screen and about 8 hours to make the shirts. I flew to Prague a day before the conference began and began making sure all of the pieces were in place. I checked in with Phil. He had reviewed most of the code, but wanted to go over it again. Kaylee bought a flight that landed on the first day of the conference to leave as much time for manufacturing as possible. He pulled an all-nighter manufacturing shirts, along with Leander. Nice. As soon as the shirts were finished, he boxed them up and went straight to the airport and flew to Prague. He took a taxi from the airport directly to the conference center to hand them out with me. DevCon 4. Day 1. DevCon was underway. I wandered the conference center handing out shirts, talking about Uniswap to anyone who would listen to me, hinting the launch was happening soon. And 2 people wearing shirts. Cool, nice butt. And that guy, and another picture. There we go, here we go. In the afternoon, Kaylee and I met Jackie in person for the first time. After some socializing, we got to work fixing outstanding bugs, adding UX improvements. Day 2. I spent half the second day wandering around the conference and watching talks. In the afternoon, once more, I got together with Jackie and Kaylee. We had a realization. Uniswap as a project should have a landing page separate from the trading interface. We built Uniswap.io from scratch that day. Day 3. Finally, on the third day of DevCon, I heard back from Phil. As far as he could tell, there were no re-entrancy attacks that could be done on Uniswap exchange contracts unless the token transfer function was specifically designed to allow a re-entrancy into Uniswap. This felt like an acceptable result. If a token was designed to attack Uniswap, then the liquidity for that specific token could be stolen. All regular ERC20 tokens were safe from re-entrancy. Day 4. On November 2nd, 2018, the final day of DevCon 4, the smart contracts were deployed to the Ethereum mainnet. Next, Uniswap.io and app.uniswap.org /hashtag were deployed. Finally, I reached out to everyone who expressed interest in providing liquidity at launch. About $30,000 was deposited into the contracts by a single provider, split across 3 tokens. This allowed for swaps of about $100. There was nothing else left to do. I spent about an hour sitting alone on a beanbag, writing and rewriting the launch tweets. Fortunately, my friend Ashley walked by and helped review my tweets. I clicked the button, nervous but excited for what the future would hold. What followed was a huge outpouring of support, ideas, and collaboration beyond my wildest expectation. But that's a story for V1, the next blog post in this series. And bonus number 1, who named Uniswap? Vitalik did. I was originally going to call it Unipeg, a mixture between unicorn and a Pegasus. When Carl first told Vitalik about the project, he said, Unipeg, it sounds more like Uniswap. More like a Uniswap. Bonus 2, who invented Uniswap? Alan Liu of Gnosis was the very first person to conceive of a X times Y equals K market makers on Ethereum. Building a decentralized exchange on Ethereum. Martin Koppelman of Gnosis told Vitalik about the idea. Vitalik saw its potential and began posting about it publicly on his website. Ah, cool. Okay, so these are just additions. And, I think we might actually save those for the other side of this. We'll save bonus 2 for when we get back from the music break. But for right now, we're gonna throw back down to some music. And as far as where to go, I think because this article has gone through so much effort to acknowledge the people that contributed to it, and that's another good marker of character in my book, is when you're actually giving attribution to people that helped you along the way. Good stuff. Anyway, so here it is. Helmet, Unsung, here on Coin Metal. And that was Textures with Drawing Circles. And so, we're going to get into that thing and finish that bad boy off. If I can find the damn link for it. Yeah. No, that's not it. Yes, that's it. Alright, so we were on bonus number 2. And this is the big reveal. Who invented Uniswap? Alan Liu of Gnosis was the very first person to conceive of X times Y equals K market makers on Ethereum. And it's a tweet, I guess, building a decentralized exchange on Ethereum. And that was by Martin Koppelman of Gnosis told Vitalik about the idea. Vitalik saw its potential and began posting about it publicly. On his website, on Path Independence, suppose that someone walks up to you and starts exclaiming to you, that he thinks he has figured out how to create a source of unlimited free energy. His scheme looks as follows. First, you get a spaceship up to low Earth orbit on Reddit, and I guess that's the limit of the... Yeah, that's just what he copied here from that particular quote. And then on Reddit, he said, let's run on-chain decentralized exchanges the way we run prediction markets. And I guess this is Vitalik on Reddit. Alongside some of the other recent paradigms for decentralized exchanges that we have seen emerge, I thought that I would offer a third alternative. This borrows some ideas from Nick Johnson's proposal here, albeit with many simplifications, and is also very similar to how prediction markets like those in Gnosis and Augur already operate. The main challenge that I see with the MKR market, Ether Delta, and other markets right now is the high spreads, often 10% or higher. A large part of this is that market making is very expensive, and creating an order and removing an order both take gas fees, even if the orders are never finalized. State channel-based solutions could theoretically solve this, but are far from being implemented. My proposed solution is to use the style of on-chain automated market maker used in prediction markets in a decentralized exchange context. The mechanism would look something like this. The market contains an internal state, price, which is the current market price. It would also have two parameters, fee and depth. If a user wants to buy order amount coins, they would raise the price to price plus order amount divided by depth and pay order amount times price plus order amount divided by depth divided by 2 times 1 plus fee. Essentially, this constitutes buying an infinitesimal number of coins at every price point between the old price and the new price. Note that this is not risk-free to set up. It requires an initial deposit of both coins and Ethereum, and if the price jumps around too quickly, it could get exploited. One way to reduce this risk is to put orders into a queue for X blocks, and while an order is in the queue, other users could snap up the order, offering to pay a more favorable rate than the original offeror. However, this has complexities of its own and could be left to a later version. Users had the ability to, quote, invest in the market. Investing and divesting are proportional. For example, if the market currently contains 2,000 Ethereum and 400 tokens, then an investor would need to provide 2,000 P ETH and 400 P tokens, which would increase depth by a factor of 1 plus P and give the investor 1 divided by 1 plus P, quote, share of the market. When the investor wants to divest, they are entitled to take out a 1 divided by 1 plus P share of whatever Ethereum and tokens are in the market out at the same time. Market out at that time. Perhaps a few hour delay to prevent divesting itself from being subject to front running during crashes. The theory is that in most cases, the fees collected will be larger than any losses from front-running attacks against the market maker, and the specific mathematical structure of the market maker ensures that risk of loss, while present, is strictly bounded, and in any case, investors are the party that will bear the risk. One concern of the above scheme, as given, is that the market would have to have a, quote, maximum price after which it runs out of tokens to sell. One solution is that at some point Ergo, when the price is more than half of maximum price, instead of increasing depth, the market simply keeps the depth the same and holds the tokens so as to increase the maximum price that the market can sell it at. The market may even choose to decrease depth automatically. One stronger solution is to make depth itself proportional to 1 divided by price and change the formulas accordingly. But this leads to the opposite problem. If the price goes too low, hence some kind of dynamic balancing is going to be necessary in any case. The advantage of this scheme from an efficiency perspective is that it offers very low spreads, but at the same time only requires a blockchain transaction for actual trades, not placing or canceling orders. The design is also relatively simple to understand and implement. Edit, for those looking at this thread in the future, I thought I would add a simplification suggested by Martin Koppelman. The mechanism would be a smart contract that holds A tokens of type T1 and B tokens of T2 and maintains the invariant that A times B equals K for some constant K. In the version where people can invest, K can change, but only during investment/withdrawal transactions, not actual trades. Anyone can buy or sell by selecting a new point on the XY equals K curve and supplying the missing A tokens and exchange receiving the extra B tokens, or vice versa. The marginal price is simply the implicit derivative of the curve XY equals K or Y divided by X. And in the comments of the article written by Phil Dayan, Bancor is flawed. Banker just did their initial coin offering last week and raised a record $144 million within a few hours. They now hold the record for the biggest crowdfunding ever in the history of mankind. We don't want to dwell too much on what this illustrates about the current ICO craze. I created Uniswap, the specific implementation of a X times Y equals K market maker that exists on Ethereum today. And there we go. And so yeah, that's the totality of the journey that has been Uniswap, at least through 2019. And I'm sure there are other articles to go further into this, and there were plenty of other references on this. Let me see if there was. This was as of November 2nd, 2019. So we're almost a full year since then. Let's see here. Let's go to FAQ. What is Uniswap? Uniswap is a protocol for exchanging ERC20 tokens on Ethereum. It eliminates trusted intermediaries and unnecessary forms of rent extraction, allowing for fast, efficient trading, where it makes trade-offs. Decentralization, censorship resistance, and security are prioritized. Uniswap is open source software licensed under the GPL. If you want to understand more about it, check out the docs. And so we did that. We clicked it, and yeah, it's good stuff. I get the impression that they're at least serious about having a project. You know, like I said, there's a lot of white papers that we've read on this show, and you can go back into my YouTube channel and find them. And I tell you specifically during the time that I'm reading them that the points where I think they're fucking silly in their assumptions, and in many cases I've actually been proven right by the way that they come to fruition, or the lack of their coming to fruition successfully, or the result of their launching and how it comes out. But yeah, the number of ICOs and the number of projects that on first glance, I'm reading the white paper and I'm like, there's no way this fucking thing is going to work, or there's no way that this is actually a legitimate project, or, these are the things that you have to look for in a non-realistic project. And, like I said, I get from the description of this guy's journey, he's walking the trail. Meaning he didn't just launch it and forget about it, or, walk with the money or whatever. And so, like I said, that speaks a lot to his character and the nature of the due diligence that he pursued in his project, or at least that he described as having gone through. It bespeaks of, somebody actually who gives a shit about their project and the success of it. And, that's... it's easy to say that you do. It's another thing to actually go to Seoul, Korea to participate in a meetup event to talk about your project and to sell your project to other people. So, but yeah, so that was a bit different than a lot of stuff that we've read about on this show, and I'm tempted to start into the damn thing. I've got all of it here. I've got getting started with the SDK, smart contract development, introduction to flash swaps, introduction to oracles, so on and so forth. Yeah. So yeah, I might just do that at some point in the future, but not during the show, of course. I would actually have to make some sort of implementation and then bring it on the show. But anyway, as far as what else we're going to get into, got a few other tabs open here that I wanted to get to. That's not it. That's not it. That's not it. I don't know. That might be it. I might actually come back to that one. This is kind of interesting. I do talk about the on-chain nature of Bitcoin, and how when we're watching the traffic on the Bitcoin network, we can see some interesting stuff. And this is just something I caught in passing. It's on Cointelegraph.com, and Felipe Irazo wrote this, and so apparently, yes, penis. Someone transferred $1 billion in Bitcoin for less than $5. According to information provided by the crypto Twitter account Whale Alert, 92,857 Bitcoin, and that was approximately 92,603,640 dollars worth of Bitcoin were sent from an unknown wallet for a fee of just $4 at current market rates. Although the Bitcoin network is well known for its generally low transaction fees, the cost per transaction has increased by over 500% in the last month. Bitcoin Blockbot, another Whale Alert style Twitter account, reported that on June 27th that a 101,857 Bitcoin transaction had moved 0.5% of all Bitcoin currently in circulation, with a total transaction fee of around 48 cents. Unknown information. We do not know who sent these funds, nor do we know who the recipient was. Social media users have speculated that a BitGo custodial wallet, which manages Bitstamp's cold storage, may own the coins. Before Bitcoin's halving, the average transaction fee peaked at $3.19. Actually, that's not true at all. Before Bitcoin's halving, actually, I want to say, no, yeah, before the halving, actually, it was just post the last halving. I paid a $22 transaction fee, so what these guys are talking about, the transaction fee, the average transaction fee peaked at $3.19. That's a whole different story. It's not the real transaction fee peak. That's probably in like the thousands of dollars. Anyway, continuing. This represents an increase of over 300% from the average fee on April 26th, according to data available on BitInfo charts. The last time the average Bitcoin transaction fee was over $3 was in July of 2019. Historically, Bitcoin transaction fees have increased markedly prior to halvening events. The last halvening on July 9th, 2016 saw transaction fees skyrocket in the weeks prior, even briefly peaking at an average of 62 cents per transaction when the value was around 10 cents within a 24-hour window. Yeah, that's very, very interesting. You know, it's interesting to me because it was from unknown sender to unknown recipient. Pseudonymous, as Bitcoin transactions were always intended to be. You know, it gives me hope. You know, it tells me that even the biggest whales aren't staking a lot of their money on Lightning Network and other such second layer projects. You know, it tells me that they're intending for the long haul, and that's a positive sign. It's kind of bullish for Bitcoin. But yeah, I bag on Ethereum 2.0 a lot, and mostly because I feel like the prospect of shifting from a proof-of-work coin to a proof-of-stake coin like Midstream is, I don't know, to some extent kind of, I want to say disingenuous, but that's not exactly the reality behind the situation, because it was always an aspiration of Vitalik's to see that kind of progression happen with Ethereum. So it wasn't, you know, it's not like it was a hidden thing or something that he didn't disclose. It was something that he said up front, said, hey, yo, at some point, I want to turn this over to a proof-of-stake network. And, you know, I think I've documented that multiple times on this show. But the process of trying to shift from one to another, I mean, it requires a fundamental change, you know, from networks that are consisting of proof-of-work miners to proof-of-stake miners, and it's a whole different thing. But anyway, so I got this thing. It's on Cointelegraph.com, and it's by Andrei Shevchenko. So yes, penis. Ethereum 2.0 devs discuss Medalla issues as network stabilizes. After the somewhat imperfect launch of the Medalla ETH 2.0 testnet, developers discussed what initially went wrong. The following successful but imperfect launch of the Medalla testnet, the first community testnet for Ethereum 2.0, Ethereum developers spoke on issues and needed improvements highlighted by the event. In an Ethereum 2.0 dev call held on August 6th, the network's client developers discussed what initially went wrong. As Cointelegraph previously reported, it took some time for the blockchain to achieve finality, with only 57% of the stake participating in consensus. Generally, 70% is the minimum for a network to be healthy, as outlined in a community explainer. Participation is currently sitting at a stable 80%, according to Beconcha.in. There were several issues outlined by the team that contributed to this slow start. Before the launch, client developers discovered several, quote, peering bugs that would have prevented effective connections between nodes. As they rushed to fix these just a day or two before block genesis, some validators may have failed to update to the latest versions. Oh, shit. They also identified several issues with the launchpad used to onboard users interested in staking their coins. Some of these related to user experience and education, as the teams were unable to prepare node binaries in time. Furthermore, some users were found to have made multiple 32 ETH deposits, likely with misguided expectations that these would let them have more validators. Manually setting up multiple validators also became an issue due to MetaMask, which opened new pop-ups for each 32 Ethereum batch all at the same time. Offline stakers and technical issues. During the launch, stake participation was just 57% during the first hour. This was, according to the team, partially due to Nimbus and Lodestar clients having low participation in attestations, which is what verifies each proposed block. This accounted for about 10% of the gap. The remainder, in addition to the confusion with last-minute client updates, was due to some stakers being offline. This is to be expected, they said, and the network will, quote, leak the 32 Ethereum stake until the offline validators are kicked off the network. The incentive to not lose money should be enough of a deterrent. But since testnet Ether has no value, this crypto economic incentive did not fully work. Some of the large stakers did not spin up their clients. Developers contacted one of them, and through a combination of factors, participation was quickly brought to about 80%. The network is nevertheless not completely stable. Prism and Lighthouse, the two leading clients according to popular usage, are still seeing validation issues. The team noted that the dominance of Prism and Lighthouse should be dealt with. According to polls cited by Ethereum Foundation's Danny Ryan, about 90% of all nodes run those two clients. Most teams focus on bug fixing this week. Some bugs are allegedly more severe than others, but none of the clients are yet perfect. Research and development continues as Vitalik Buterin published an annotated specification for Ethereum 2.0 Phase 1, which should include basic sharding. Yeah. Well, you know, any kind of launch is going to be plagued with bugs. It's part of the launch process. It's part of the beta testing process. And so, you know, I admire these guys for even giving it a try. Trying anything new is to face failure. It is a possibility. You know, and you know, like I said, I think that it speaks a lot more to their character that they're willing to even try than a lot of people that just are naysayers. And I hate being one of those. You know, my dismay or discontent with the idea of shifting over to a proof of stake network from proof of work, that's just my own misgivings about it. But you know, like I said, I think that anybody who's willing to face such criticism, even by people that have no stake in it, and still give it a go, hats off. Anyway, let's go ahead and throw back down to some music. And as far as where we want to go next, well, I wish I had some fucking AC/DC I'd throw down for those about to rock We Salute You. Let's see here, though. I do not have AC/DC. I don't know, I think it's because I actually saw them live, and it was during the, I think it was Steel Wheels tour? No, that was Rolling Stones, I think. I don't know, it was about the same time that AC/DC was trying to make a little bit of a comeback, and I don't know. I saw him live, and it might have been the seating, but it wasn't a terribly exciting concert. I don't know. I've seen a few shows, and I give you the truth here. I think that Melvin's put on a slightly better show, but I don't know. It might have been the part of the tour that they were on. They could have been on the last leg of their American tour, and they were quite old. They were a little bit older gentlemen at the time, but even so, Melvin's is kind of old at the time that I saw them too. So it's not really an excuse. But let's go ahead and throw back down with something, and I haven't played anything off of Five Finger Death Punch today yet. Let us see here. Where'd it go? Burn It Down by Five Finger Death Punch here on Coin Metal. My apologies. That's actually a Voivod Ravenous medicine. What? Medicine? I'm having a hard time reading that. Anyway, so it is with that I'd like to close out this episode. Thank you very much for listening. I certainly do appreciate the support. We will be back again on Monday at 8 p.m. Pacific Standard Time, and so until then, I want you all to trade safe, do your homework, and watch out for your own bunghole, because nobody else is going to do it for you. And unfortunately, as we kind of run it to the very end of our time slot here, there will be no last dance. But thank you again for listening, and y'all have an excellent weekend. Good night.